DBS presents CNBC TV18 India Singapore Connect.
Hello and welcome to our special show, India Singapore Connect, presented by DBS Bank in association with CNBC TV18. India and Singapore have a long connection in history. The name Singapore itself has both Sanskrit and Tamil origins. More than 500,000 people of Indian origin live in Singapore. The two countries have signed the Comprehensive Economic Cooperation Agreement, or what we call the CECA, and also a strategic relationship agreement in order to increase trade, investments, and economic cooperation. They have also expanded bilateral cooperation on maritime security, training forces, joint naval exercises, developing military technology, fighting terrorism, so a whole host of cooperation. Today on this show, we are focusing on managing the global forces of disruption that are rising even as we speak, and on how economic connections between our two countries may be increased. Joining me are two stalwarts, TV Mohandas Pai, the chairman of Aarin Capital, and Taimur Baig, chief economist, DBS Bank. Gentlemen, thank you very much indeed for your time. Really grateful.
Thank you.
Well, Taimur, let me invite you to first set the context, especially because the context is changing as we speak. We are living in a world that is fragmenting and getting fractious by the minute. At that time, can we really talk about cooperation on the Eastern Hemisphere?
This is the time to talk about cooperation in the Eastern Hemisphere. I think the time for look east is over. It's time to act east. I think that the way to differentiate against that forces of fragmentation, forces of inward-looking policy is to establish one's credential as an entity, as an economy, as a trade agreement that is open for movement of capital, movement of ideas, protection of certain rules-based order. I think this is when global investors would look for certainty. There are places of the world that were the bastion of certainty and stability in the past. They will not be like that in the future. South Asia and Southeast Asia can form a bulwark of cooperation and openness that will be a vastly differentiating factor for the global investor than ever before.
Okay. Mr. Pai, would you agree, sir? You know, the world as we know it seems to be changing. For a century, we thought that the two sides of the North Atlantic Ocean would be friends. But now there are tit-for-tat tariffs in that part of the world, something we would not have imagined. Do you think that means we have to forge closer ties outside of the so-called West?
You know, Latha, my view is President Trump is a big disruptor of the existing order. We've seen stability in geopolitics since the war, with the US and Europe dominating. And now I think that is coming to an end with President Trump putting America first. America has been subsidizing Europe in its defense, and America's market has been open to everybody, while others have shut down their markets, especially China. Now I think President Trump has got the right policy to say that you put tariff on me, I'm going to put tariff on you, and let's work together to reduce the tariff. Give access to your market, and I'll give access to my market. Now I think that is a very, very big shift in US policy. And that means very clearly countries have to decide whether they want to trade with the United States on equal terms, or they want to put up tariff barriers against the United States. Sadly, the US, in my view, is not in a position to export a huge amount of commodities and goods, primarily because most of it is now produced outside China. I mean, outside the United States, in China and other countries. China is 30% of global manufacturing. So now we are seeing a different world where China as a dominant power in Asia and the United States, a dominant power in the West, will have to fight for dominance in the global markets in the future. And that means that other countries, especially Europe, the rest of Asia, Southeast Asia, India, have to work together. And I see great prospects for India and Southeast Asia to work together because we are also seeing technology disruption on a gigantic scale. India has the technological capability. India has the human capital and the technological sophistication to fight in this era of the digital revolution. And Southeast Asia has capability and maybe capital. And I think both the areas working together can possibly create a much better multipolar world.
Taimur, Southeast Asia is already somewhat integrated. ASEAN is integrated. There is a great deal of cooperation as well between the other non-ASEAN Southeast Asian countries and ASEAN and China. Will Singapore be a link through which India connects to this giant bloc? How do you see it working out from an India standpoint?
It certainly looks like a natural point of linkage to me. India and Singapore certainly have one of the deepest relationships with respect to cross-border FDI in all of the region. And Singapore, from a cultural perspective, from a historical perspective, have always found it comfort in dealing with India, whether it's with respect to people, exchange of capital, exchange of investments, and so on. India, in recent years, have had its issues with respect to how it wants to deal with the regional supply chain. So it chose not to be part of the regional comprehensive economic partnership, through which Southeast Asia has become more or less a common market for exchange of goods. Just like we talk about how inputs move between Canada, US, and Mexico before they turn into a final product, in Southeast Asia, the same thing happens. Okay. Electronics products in various input form move around the region at zero rate, and as a result, they can act almost like they're being produced in a common market. It would be helpful for India to be part of that. I can understand why India has chosen not to be part of that so far, given that it does run a trade deficit with most countries in Southeast Asia, and those deficits have not really come down a lot. And of course, its deficit vis-a-vis China is substantial. But I'm picking up signs of a thaw in this line of thinking, which is that trade deficit is the reason you should worry about partnerships, because it might compromise your own market and your own companies. I see greater degree of amenability of India with respect to Chinese capital in the last 12 months that I've seen in many years. And I also see some degree of discussion at the government circle about the wisdom of being part of RCEP that I frankly did not see 1 year ago. So I see the movement in the right direction.
Mr. Pai, what would your thoughts be? I want to come to the financial investments and the cooperation on that front, how the CECA has worked. But on manufacturing itself and the Make in India, getting into the global value chains, do you see now an increased urgency for India to cooperate?
The key for India is to work out a strategy with ASEAN, where ASEAN and India can work together with proper rules of origin. And I think the market is there. But we are running into trade imbalances with Thailand and other countries of ASEAN too. We're not seeing our business being encouraged there. People can always argue that India is not marketing, India is not selling, but there are non-tariff barriers. I've been to many of these countries. I've seen trade happen, and there are barriers there. And I think it's important for us to understand reality. So RCEP is a very, very big danger. I think ASEAN and India should work out strategic relationships in certain areas, particularly in areas of electronics, in the area of semiconductor area, and in multiple areas where ASEAN has got strength of its own and is a global supplier, and see how we can work. We have to forge a digital partnership with ASEAN, maybe having Singapore at the base, and we got to forge an investment agreement with them so that there could be free flow of capital from ASEAN to India and India to ASEAN. Yeah. And I'm sure the ASEAN countries will now be more comfortable working with India because they've seen the Chinese domination of the manufacturing industry.
Singapore has been the source of a lot of financial investments. A lot of the brokerages that invest, DBS included, investing in India, are stationed in Singapore. So after a short break, I want to ask both of you what kind of financial ease of doing business we can forge between our two countries, Singapore and India. We are back in a minute.
DBS presents CNBC TV18 India Singapore Connect. DBS presents CNBC TV18 India Singapore Connect.
Welcome back to our special show, India Singapore Connect, presented by DBS Bank in association with CNBC TV18. We have been speaking with TV Mohandas Pai, the chairman of Aarin Capital, and Taimur Baig, Chief Economist, DBS Bank. Gentlemen, thank you very much for waiting on and for your patience. Mr. Pai, I should really be asking you about financial cooperation and financial institutions. Singapore has housed a lot of brokerages and FPIs investing in India. You are yourself a very major investor, a very key investor, and via media, a conduit for investments into India, especially in the startup system. What would you suggest in terms of increased cooperation of brokerages and banks stationed in Singapore and wanting to invest in India?
Well, Latha, let me say that in the next 10 years, India has a 80-85% possibility of becoming a $10 trillion economy. We are close to $4 trillion right now, and will grow by $6 trillion for the next maybe 10 years. And there's a great probability of it happening. So it's time to relook at the India-Singapore partnership and see what we can do together. First, we must partner in the digital revolution. In the era of AI, in the era of cybersecurity, quantum computing, in biotechnology area, etc., which are frontier technologies which could explode over the next 5 years. And I think both countries should have a serious dialogue how to make it extremely strategic, because once you work with Singapore as the platform, the ASEAN market will come along and we could forge a market of maybe 2 billion people, a market of 2 billion people, and maybe right now, maybe a market of maybe 6 to 7 trillion. And that'll be very, very exciting because, the digital revolution is taking deep root and China is an extremely big player. The US is dominant and the rest don't matter at this point of time. So there is scope. That is point number one. Two, do research in cybersecurity and in defense technologies. For example, if quantum computing comes through, and it's already come through because we saw DeepSeek say that they are able to generate speeds of 100,000 times what Google is doing, and that is very scary. How do we work together in cybersecurity for AI and quantum computing to protect our financial systems? Because today we are at great risk in the financial system with AI coming on and quantum computing increasing the speed of computing multiple times. How do you protect our financial networks? It's a common problem all across. And I think we need to spend time together because both the markets are very, very large. And that is important. And then we should see that how do we expand our markets for financial investment? Singapore has been investing in India for the last 30 years. They know the Indian market well. They have been big players in many of the large enterprises. They've made a lot of money investing in India. And DBS is already here at the bank, and the bank is growing. And of course, the growth for DBS would come in India. Can we treat DBS like an Indian bank? Give them all the facilities like we give our major Indian banks, because DBS can be a strategic partner for India. And it's a good bank, and maybe we can do that. And the financial areas, what we need is investment in innovation. How do we and Singapore work together to invest together in startups and technology areas, which are the areas of the future? Because the existing area, there are multiple investors coming in. Temasek and JIC and others are big players. They will continue to invest. They know the market. But how do you create new areas? And how do you make sure that we can create a common market between ASEAN, including Singapore and India, in the digital markets? In digital public goods, India has done a great job. How do you make sure that DPI is something is already working?
Yes.
And we are already working. We are cooperating with Singapore. But ASEAN should take the lead too to bring that in. Because we've seen some good companies like C and others come up in Southeast Asia. They become very big. They're domiciled in Singapore. How do you grow that part of the business? To me, that is extremely important. The last point, I think in infrastructure, I think, Singapore set up the technology park in Bangalore. That's pretty good long back, 25 years ago. And we should partner with Singapore in developing our urban areas and our cities. Maybe a partnership with Singapore and Mumbai, Singapore and Bangalore, to develop urban areas and working together and to see how we can get long-term funding to create urban assets is something that we could look at, which will be very, very useful for both countries.
Speaking about this digital cooperation, I wanted to ask you, Taimur, we already have UPI linked with Pay Now. And, small retail payments can go across these two countries very easily. So cooperation has started off on the digital front in some way. Do you see more in terms of use of currency? We still have, the Asian Currency Union where we are able to net off. So some kind of financial and payment cooperation is already there. Any thoughts on those? And as Mr. Pai was saying, for a bank like yours, what do you see as the contribution for increased business between the two countries?
So, Latha, you're right that the starting point is a fairly well-developed one, both with respect to payments-related connectivity and cross-border payments. But there's certainly, room for improvement and deepening of particularly cross-border, but as well as, payments and settlements between the banking systems in this part of the world and in India. I think India, both the bank and the non-bank financial sector, have really gone strength to strength in recent years and decades in building up their digital platforms. And the fact that, we here in Singapore, as well as our footprint in India, we're sort of, leveraging off of that digital ecosystem, definitely leaves room for symbiosis, but there's definitely room for improvement as well. Just look at the European Union, for example, the seamlessness with which capital flows around there. Surely we could emulate something like that going forward, even if there are cross-border currency issues and cross-border jurisdictions issues in place. The netting out point that you made is an sort of interesting one, right? That how do you have market making taking place on an intraday basis on the payment side, on the settlement side, and not necessarily everything has to be settled within the day, but you can have an end of day netting out. And can you have a risk management wrapper around that? I think ideas like that have been tried and tested, and the answer is emphatically yes, it can be done. And central banks, both on the Indian side and the ASEAN side, have found a great deal of comfort in allowing those sort of things to happen. We still have some degree of friction in terms of non-deliverable forward-related trading, some degree of friction as to how to take public capital versus private capital. Not exactly hard to solve areas. It's just a question of bringing everybody on the table and trying to find some sort of a middle ground. I think there's room for that. But the last 10 years track record with respect to the Pay Now platform in this part of the world and GPay in India's side or the UPI network gives me a lot of confidence that there is available room for growth and it's realistic. It can be done.
A very quick similar question to both of you. Do you see, Mr. Pai, that India, after all, we're concentrating so much on manufacture through our PLI and other schemes to get into the global value chain, to become a manufacturing outpost for the world. Do you see any cooperation possible with India as the manufacturing base and Singapore as the logistical partner?
Well, I think it's already happening in a big way because it's all market driven. And we must remember, Latha, that India is the 5th largest manufacturing power in the world. Okay. We only have 4 countries ahead of us. China, United States, Germany, and Japan. And we are the 5th largest. And I think the next 4 or 5 years, we could be the 3rd or 4th largest in the world because the manufacturing capacity is growing as our economy grows tremendously in most areas. And in the chip area, which is hot, India dominates in the chip design, testing, and embedded software space. And I think that's tremendous because most of the American companies work with Indian companies in an extremely big way. So I think in the frontier areas, we should focus on the frontier areas while we continue to work in the traditional areas because great value is being done in the frontier areas. And the frontier areas are going to be areas where non-tariff barriers are going to be put up in the form of technology, in the form of defense and other places, because the United States and China will think that's very, very strategic. And they're spending huge amounts of money in these areas. And that's where I would like Singapore to be the catalyst for Southeast Asia to work with India to create common assets for the use of both countries. And between the ASEAN and India, we must work together to improve the flow of trade and payments and settlement, because these are all problems that can be easily solved.
Yes.
And I don't think we have any issues with ASEAN or with Singapore on that, but the focus should be more from the Indian side. India is more focused on the West.
Yes.
India is said we have a look east policy, but they got, Taimur said, an act east policy in a very, very significant manner. Now that we have the gift city, many of the shibboleths that we suffered from in terms of capital convertibility can be done away with. The gift city can be a great force multiplier for ASEAN capital and Singapore capital to access Indian markets much more. Though Singapore knows how to work and invest in India. They've been doing it for 35, 40 years. They've done extremely well. They have the offices here. But I think ASEAN should come along. So I think we need to have serious dialogues with ASEAN, especially Indonesia, Thailand, Malaysia, and Singapore, and work together to expand our markets between us, and maybe we ally with Japan too to create a very good trading bloc, Japan, Southeast Asia, and India.
Final words from you, Taimur. Do you think that, India will focus more, India should focus more towards the East, and banks like yours have a role to play in that?
Latha, right now, Southeast Asia is going through a golden era of investment. Singapore in the last 3 years, each year has attracted more than $100 billion in net FDI in the country. Malaysia, which was dormant for a long, long time, has really woken up and captured the imagination of global investors and receiving $20–25 billion in FDI every year in recent years. So the region is flush with capital. The region is flush with interest of global investors to take advantage of its unparalleled supply chain and logistics. I think India fits like a glove in that dynamic. It is not something that we need to force. As Mr. Pai pointed out, it has already a well-established and fast-growing manufacturing base. I think it can go strength to strength if it takes advantage of the supply chain that ASEAN has. The region is rich with capital, and there's a lot of areas where the capital can be deployed gainfully in India. So that sort of symbiosis, it's a no-brainer in my view. The China question is always going to be there. But the point of the matter is that China does not only enjoy cost competitiveness, it also has tremendously growing brand capacity. People don't associate BYD as a cheap car. They associate BYD as a competitive, good quality car. And that is something both manufacturers in India and Southeast Asia should be emulating, that it is not just the next generation of being competitive by tapping into our cheap labor or good logistics. It's a question of developing brands for the future that the whole world would like to tap into and consume because it is made in our part of the world. And there is tremendous amount of symbiosis available for that. Okay,
no, fair point. I think, everything you say is valid, but it's cooperation and conscious looking east that perhaps India and Singapore should build. But consciously, it should become a DBS Bank, which is the go-to, arranger when India looks for capital, so that there is a conscious Eastern financial center that we seek to develop. After all, the region is extremely evolved even on financial matters. So it's a question of changing emphasis and consciousness. And you both have given us a blueprint that the two countries can follow. Thank you very much, Mr. Pai and Taimur Baig, for whetting our appetite. We will have more such conversations.
DBS presents CNBC TV18 India Singapore Connect.